Well, a captive insurance program is, to some people, is a little bit, they get skeptical because it's unfamiliar to them. You know, in the traditional market, everybody's pooled within a group, good risk, bad risk. Premiums are developed based on the industry class. Good risks suffer from bad risk performance. In a good captive program, then it's a best in class. So you're in with a group of peers that are best in class in their industry, and it can be mixed industry. What that generates typically is premiums that are less. And in good captive programs, instead of the insurance companies making the profits, the dividends will end up going back to the members of that captive rather than to the insurance company. So along with it being a risk transfer, first dollar risk transfer, it's also a financial tool to realize some returns on your premiums that you've paid in. A lot of the fears of people going into a captive is there's some really bad captives out there. There's some really bad stories out there. You know, people utilizing a captive for tax advantages and having to deal with the IRS. Or one thing we hear a lot is, well, we don't want to be in a pooled group. Well, you're in a pooled group in the traditional market. They just don't realize it. One of the best ways to break somebody's fears of a captive program is, one, having them communicate with people that are in the program and being very transparent on all the goods and bads of a captive.